I'm telling you first, if no one else is telling you, this is not people buying gold because the Fed's going to ease. This is people buying gold because they want the gold. If they were buying gold because the Fed was going to ease, they'd be buying silver too.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. Hope you had a good weekend and a happy Easter. I'm Vince Lanci, and in today's market rundown, we're going to talk about gold's price action with emphasis on technicals and commitment of traders report, and silver's potential coming to fruition this month, if not this week. Let's take a look at the prices first. The dollar is up 2 at 104.55. 10-year yields are largely unchanged at 421. The S&P 500 is 52.67, up 3 handles. The VIX is 13.63, hanging in there, up 63 basis points. Gold is 22.49, up $16. That's 71 basis points. Another new all-time high overnight, starting in Asian hours. Silver is trading 25.04, up 7 cents. Copper is up 5 cents at 4.03. Bitcoin is down almost 2,000. That's at 69.508. Ethereum is 35.44, down 103. Platinum, palladium are both up. Palladium is up 1% at 10.24, and platinum is at 9.11. Up $6.88. Oil is unchanged. That's interesting. Natural gas is unchanged at 83.43 if you're not watching, and natural gas is trading 165. The one handle, try not to care too much down there, unless you're trading it every day. Grains are mixed. Soybean is 11.92, up 4.5 to 5 cents. Corn and wheat are down 4.31 and 5.58 respectively, down 3 and 8 cents. Wheat's pretty volatile. Okay. Incidentally, if you're looking at your screen and you're seeing multiple different prices for gold, gold's up $40, gold's up $20. That's not volatility. One of the screens is futures, and the COMEX futures close earlier on the weekend, on Thursday, this weekend, right? And spot kept trading. So COMEX is opening from a 2 o'clock close, and the market had a nice $20 rally after 2 o'clock. So you're not, seeing things. Gold's up $16 from 5 p.m. on Friday, from 5 p.m. on Thursday, I should say. And it's up, $35 from 2 p.m. So it's just $20 in difference there. All right, so let's get going. Oh, there's the homepage. We, in Gold We Trust they put out an annual report, and if you're not familiar with it, you should get familiar with it. Their report comes out in May, and it's a big fundamental write-up with interviews and historical perspectives and features that you don't get anywhere else. I think it's very good. But before that, kind of a tease, and it's not even a tease. It's a material report. They put their graphics out first, and they're known for very good graphics, but specifically they're very clean. They're not junked up with a lot of lines. There's a message in each chart, and you can see the message. It's not like you're being distracted. Very good for people like myself that have a hard time concentrating on anything more than 5 minutes. But anyway, we have that chart book here, and you can also click on here and get it from their site. It's as people call it, the gold standard of gold studies, and I don't disagree. Okay, let's get to the main event here. There it is. Are banks buying dips now? That's a question I asked myself this weekend when I was looking at the commitment of traders and the CFTC analysis. And the answer is probably yes. I've been saying there's been a big buyer for months, but the buying has kind of changed starting in that daily, I'll pull that daily chart up a second, but there's a daily chart. I kept saying there's a Lanci here, it keeps getting bought. And I'm like, it doesn't make sense. Central banks wouldn't be buying at this level. They would be even more patient. I'm like, discretionary funds could be buying it, but they've already bought it. I think the banks are buying it. I'm not sure. The question is, are they getting long? The next question, right? In my head, are they getting long or are they covering short? It's probably a little bit of both, depending on the banks and how much in the know they are. So let's take a look at that a little bit. All right, first thing, just to get this out of the way, just because I saw this and it just blew my mind. Bloomberg's this morning, Bloomberg says those bets on Fed easing are juicing a rally in gold, which hit a fresh record. Bullion jumped to as much as 22.6573 an ounce on Monday, up 1.6% from Thursday's close after setting a series of peaks in recent sessions. A host of other drivers have helped push up the metal by around 14% since the middle of February, including elevated tensions in the Middle East and Ukraine and strong buying by central banks, particularly in China. There is nothing in that statement that isn't correct. The lead sentence, I'm telling you first, if no one else is telling you, this is not people buying gold because the Fed's going to ease. This is people buying gold because they want the gold. If they were buying gold because the Fed was going to ease, they'd be buying silver too. Silver's an economic metal. They're buying copper. They're buying gold. They're buying copper for economic reasons. They're buying gold for monetary reasons. And silver just started to catch fire last week. So why are these metals being bought? It's all central bank and Far East buying. China is going to stimulate. That's what that bazooka post is I have there. Anyway, so there's nothing wrong with what they're saying there. It's correct. But look, anytime you're reading a Western journalist, they're going to tell you that whatever's happening in gold, if it's going up, is because of something the U.S. is doing. If you can't keep the price in gold in check, blame it on the Fed. Don't say that there's anyone else out there in control. Anyway, MSA, right? Michael Oliver. This is the main event, right? Right. He has updated his charts and he has a full report out to paying clients, the 360 update. We have excerpts for gold and silver here for you. Not a lot new on gold, and can there be? I mean, it's doing what he said it would in November, and frankly, what we said it would after the November close of above 2009 spot 20. Anyway, he's updating silver. He's moved on properly. He's looking at the next move, which should be in silver, and the next move, which should be in the miners. Anyway, let's read. I'm going to read an excerpt or two from his work for you. All right, so this is me talking here. Similar setups as he and we noted in November for gold are upon us. Specifically, price action for this month will likely determine silver's next $4 move as well as miner direction. I don't propose to know much about miners except that when they go up, you make money. Silver, all right, here's Michael. Silver annual momentum. For April, we want to see a monthly close of 25.25 or higher. Now we're very close to that now, right? Often with such structures, when we're so clear, large, and ripe, waiting for a monthly close can mean missing a lot, meaning we're at the beginning of the month now. If we're trading 25.50, do you wait another 29 days? Anyway, and he offers an explanation for that and another price. So it's kind of like if we close above 25.25 at the end of the month, you're bullish, or if we trade above a certain price. And I subscribe to his advice on that. I'm going to give you my version of it. I don't want to share too many of his numbers, but I'll give you my version of it. If someone gives you a number, 25.25 at the end of the month, and you're like, okay, well, what happens if it happens during the month? Well, you have to come up with a matrix, a grid. And the answer is, aside from having a number that someone else gives you, you want to ask yourself, what are the chances that we will finish above 25.25 if we're trading 25.60 on the 30th of April, right? The answer is 99.9%. What are the chances? And you take the price and you work backwards through time. Now, that may seem like a lot of work, and especially if you have a life and you're not doing this for a living like I do. Another way to do it is if you're familiar with options, look at the 30-day option. okay? The 30-day option, and look at the $25 strike, okay? And look at the delta of the call. Delta of the call is the probability of that option finishing in the money. So if we're trading 25.60 and the delta of the 25 call is 70, then there's a 70% chance we will close above 25, which is essentially 25.25. So with a 70% probability in mind, then you would put on 70% of your position, depending on how big it is. Okay, just a way to give yourself some sanity. Moving on to the GDX, Van Eck Gold Miners ETF. I like this analysis. GDX, for this momentum chart, we specified that a monthly close for March at 31.55 or higher would do. So in the final hours of the month, GDX got above 31.55 and hung in there to close at 31.62. So it's on for GDX. It's interesting that GDX and silver are, call them both on or call them both on the cusp, right? So this would be do or die. I wouldn't say die. I would say this would be do or keep your powder dry again this week. So I would be very friendly. By the way, the only data you have to worry about this week really is Friday, non-farm payrolls. All right. Relative performance, an interesting one that everyone's talking about. Relative performance of gold miners versus gold. We specified a monthly spread close for March at 1.46% as a breakout. There was a sharp gain this month in the spread, meaning in March, but the close was at 1.426%. GDX is price expressed as a percentage of gold. So you see a downward slope there. So basically, the GDX versus gold relationship is at resistance, right? Right? And by the way, if miners don't perform today and gold stays up $13, $15, $20, well, that resistance is failing. So, that's the point. You want to see the GDX move with gold, right? Now, you don't want to just see gold move anymore. And that's why he's giving you the line in the sand. Silver as well, 25, 26. So really everything is on the cusp. So if you're naked long gold, right, and you're a relative value player, sell some gold, buy some gold stocks. I'm not telling you to do that, just hypothetically, that's how you do it, right? If you're naked long gold and you don't want to deal with miners, well, you should just sell some gold and do nothing. On the other hand, if you're flat and you're looking to do something like, gold's really high, I don't want to buy it. Yeah, you should do hypothetically like I did last month. I bought miners when Druckenmiller announced. I'm like, I guess he knows something because I had just been long gold. I'm like, all right, I'll sell some gold. I'll buy some miners. So I was in a relative value play. Anyway, so that's the insight. There's a lot more on that, as well as our own insights, which goes to the point of the banks buying the dip. And I'll show that on the chart in a second. Market news. All right. So the market news, there's plenty of news items, but none of them are really specific. But I'll just say this. China stimulus is starting to be felt in the markets there. I'm not so sure that the data is as good as they say it is, right? AT&T, better late than never, admits that they lost, millions of accounts. OpenAI and Microsoft are planning a $100 billion data center project for an AI supercomputer. So when they talk about Bitcoin stealing energy, they're not talking about AI stealing energy. OpenAI, by the way, is Microsoft. Home Depot is placing an $18 billion bet that it will take the retailer beyond its big orange stores. That's them saying to you retail is dead, right? They're going upstream. They're going to start partnering with developers or housing developers, not institutional, not commercial. Plunging demand for commodity offices in the U.S. is driving growth for the highest quality properties. Plunging demand means plunging demand. That means of the 500 properties that are emptying, 3 will be filled up because they'll be premium. So, there's nothing bullish about that. Lloyd's of London, which is a big reinsurer, is saying that the Baltimore port is going to be a big deal in terms of insurance. And when you see insurance companies coming out announcing the losses, they're prepping their shareholders for lower stock prices. They're also letting the government know you better help us. And we're going into an election, I'm sorry. So I don't think you're going to see any losses advertised. The government's going to take care of them. In China, they've launched a new car. They're selling the cars at a loss. Reminds me of Japan in the 80s when they sold chips at a loss, subsidized by the government. Sayonara Tesla. I know sayonara is Japanese, but I don't know the word for see you later in Chinese. Geopolitics, I'd say the main event was Erdogan getting a vote of no confidence from the mayoral municipal elections, which is going to affect him somewhat, but I don't put too much of a thing on it. Today we have some data, 945 U.S. manufacturing PMI. That's the next leg, right? If we're going from a consumer economy to a producer economy, PMI will go up. If PMI is not going up and people aren't spending on stuff anymore, well, then they're not making stuff to replace that stuff. So you want to look at it like that. It's like, okay, are the manufacturers kicking into gear again? Well, then PMI will be strong. And you can see Friday's non-farm payrolls. There's the premium report, CFTC analysis. Are banks getting nervous? What are they doing now? So now we'll go to the chart. I'll show you what I'm talking about there. Let's go to the daily. These channels here, I can't prove it to you, right? But this is central bank and sovereign fund buying. This one maybe, but these three are. Okay. Now, when the market ramped here, that was macro discretionary and momentum type funds saying, is it safe? Can I buy it now? And for some reason they bought it. They probably were told that these guys are done buying, and they bought it. They get in here. And then I noticed, I mentioned several times that there was a ledge here. And I'm like, this central bank wouldn't be buying up here. They don't buy like that. They buy weakness. They don't buy flat price. I mean, I'm not saying they can't, but historically they don't do that. They don't put a line in the sand, okay? They buy over time. And they'll let it keep coming down. So who was buying? At first I thought it was macro discretionary. I have changed my mind, or put it this way, I don't feel as confident about that anymore. I think that was bullion bank buying. And the reason I think that is when you look at the CFTC analysis, even though they're short, on paper, they're not short, right? They're long when the market goes up. Even though they're short, macro discretionary isn't buying as much as they did on the way up. This is not macro discretionary buying as much as they normally do. And then the market got, so this buying is here. And then the CFTC report comes out. And I see that the banks have largely done nothing. So if they're doing nothing on paper, they're buying dips, meaning they're selling rallies to people that are buying it. But when it comes back in, they're buying it back. So they're not, they're selling 10 to buy 15. They're not selling 10 to sell 5. Anyway, so I believe that the banks are I don't want to call them friends, but let's just say they're your frenemy now. I believe the banks are lending support to this market. And of course, they're fickle and they can change their opinion on a dime, but or news item. But right now, I think the banks are playing this from the long side. And the most important thing about this whole meta-analysis I'm giving you is this. Gold doesn't do what it does without the Bank of International Settlements knowing about it. They didn't let it happen here. Sure, I'm talking about. No, you're not allowed to go up. No, you're not allowed to go up. I mean, these are significant levels that we had here. Maybe it shows up on a weekly. You or me here. Yeah. They're letting this happen. I mean, the forces in the market are bigger than the players in the market right now. That's what's going on. Anyway, I'm Vince. Let's take a quick look at the markets again. Gold's up 14. Don't be surprised if we come off today. I mean, this can't keep going on. Again, I'm always careful, but that's pretty much it. Have a great day. I'm Vince, and good luck.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week's special is 2023 dated 1-ounce silver Cougarans for only $3.10 over spot. Cougarans come from one of the major sovereign mints in South Africa and are also IRA eligible. Find out more about how Precious Metals IRA works or to get your Cougarams, call or email us at 833-326-4653 or arcadia@milesfranklin.com. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.